Welcome back, everyone. This is Seewing Yee, and my co-host is Mr. Justin Zawatney from Southwest Florida, Cape Coral. How are you, Justin?
Doing great. Thanks for having me back again, Mr. Yee.
Very good. Today, we're going to dive into several great topics because Justin is our amazing property manager in Southwest Florida, Cape Coral, and the surrounding vast areas, helping out-of-state investors for a number of years achieve amazing wealth. And so we're going to dive deeper into what's going on. We have several topics to discuss, and we're going to refute all the misconceptions out there. We're going to provide you some real data, not only from Redfin, a website I'm going to use on the Cape Coral growth for the past few years, but Justin, because he has boots on the ground, he know all the neighborhoods. He know how to pick the right rental properties for our out-of-state investors. So without further ado, let's dive into it. So I'm going to share my screen and we're going to go over, like I said, the Redfin weekly housing market data, which I use a number of times to do my Zoom videos on various markets. So again, this is real data, and you need to people out there. You need to be careful who you listen to. The house crash bros out there, the doom and gloomers, the video content creators. They talk all bad about Florida, but you have to take it into context. Okay, you have to dive into the real data to make your own get an informed decision, because the YouTube videos, the TikTok, the social media, the Instagram, the Facebook, the presentations are really the wild west of social media. You listen to the voice of credibility and honesty and track record, like myself and Mr. Justin Zawatney. Then you it bode well for your future investment career. All right, Justin. Without further ado, we got so much to cover. So pay attention, everyone. So here it is. I'm going to use this Redfin weekly data on Cape Coral. When I say Cape Coral, it's not just about Cape Coral. In the entire county, there are two counties in the Southwest Florida, and let's dive deeper. So here are some four metrics I like to go over briefly. This is not going to be a long video, and Justin will going to provide you input when you see fit as I go through the presentation. So these are all important data. So let's go over the new listings. New listings for the year to date, which is September, right here. Not is when you say new listings are not increasing, that means we will not have a glut of supply of homes into the marketplace, which may cause houses to come down. As you can see, at the beginning of the year in the Cape Coral region, we have quite a few listings high up there. But as we go through the rest of the year, new listings has been decreasing. So therefore, so there are potentially any glut of supply of homes out there are being absorbed by potential buyers, especially with the mortgage rate right now. We're talking right now, September the 22nd. The mortgage rate, according to the Mortgage News Daily, is 6.15%, which is amazing. So we may or may not talk about that decreasing mortgage rate, which will bring a lot of surging in demand. It may not happen for the remainder of this year, but watch out when the spring 2025 season come around. All hell is going to break loose. You're going to see an influx of buyers getting off the sidelines, and then you will get more competition down the road, and that therefore raising home prices because there are more demand than there are supply. So right now it's an amazing time to with just a small window of opportunity, sort of being a buyer's market for investors. You can get some great deals, which we'll talk about later on these videos. So these listings are nothing to be concerned about. As you can see, we go into the seasonality of each year. The fall season, really, you do not have that many transactions.
I think real quick on that chart, one thing that I like to see, we're following a really normal cycle. Down here in Southwest Florida, we're a very seasonal market. The most buyers and sellers are down here through the winter. So you're that spike, the beginning of the year, is very normal, right? People are here, they're buying and selling. There's a lot of transactions. But the biggest thing here is the biggest misconception is there's too much inventory. Inventory is everywhere. There's really not. Look at it compared to 2022. 2022 was a very unhealthy seller's market. There was not enough inventory to sell. Are we higher than that? Yes. Should we be? absolute, we're still falling in that 3 to 6 months of sellable inventory, which is healthy. Is it 6 times the 1 month we had in 22? Absolutely. But we want it there. That's so always be careful with the headlines, right? Someone said, oh, there's 5 times as much inventory. Is that really bad? In this case, no, it puts us right to where we want to be. There's not too little or too much inventory. It's just right.
Yeah. You have to take negative headlines with some context because 5 times greater inventory, then from those negative headlines, then I say, compared to what? Compared to pre-pandemic, it is still below a norm at the norm in terms of supply of inventory. So
Exactly.
you cannot compare this year from last year to 3 years ago. This is the last 4 years has been an anomaly. Is something that not historical norm. So take it for what it is. Do not get overwhelmed by those misleading housing crash bros out there that want to scare the heck out of you because they want clicks, they want subscribers, they want whatever. Anyway, all right, let's continue with the next trend. I want to share that with you is that let's go over medium sales price. Or some people think, oh, Cape Florida, Cape Coral is going down the toilet. Not so quick. Look at the current year medium sales price, which is only down 4% from last year, 2023, and only down just a little from the amazing skyrocketing market back in 2022 on the block line, and then 2021. Look at 2021. Look how much prices have increased from 2021. Like medium sales price in Cape Coral area 3 years ago during the peak of the housing boom was 326. Now it's gone all the way up to 377. Just a medium sales price. And so you compare, I don't see any drastic price decreases, only a few percentage points from the previous 2 years. I don't see no crash. I don't see a little bit of correction in this market. So what's your point?
Again, if we're writing the doomsday headline, right? Prices are down in Cape Coral, the market's crashing. But now let's take that and put it into context and think through it. Are prices down? Yes, by 4%. Was that completely by design? Yes. The Fed doubled the interest rate intentionally, trying to stop home prices from skyrocketing. It is not healthy in any market for prices to go up by 22% in a year. That is bad. That is unhealthy. We don't want that. By design, the Fed raised the interest rate to level off the prices, to stop inflation. And now they're starting to cut back slowly, healthily, that interest rate, which is going to go back to putting us on positive growth, probably something very close to slightly above that national average of 4, maybe 5% per year, which is where we want to be. As great as it is as the owner, if you're an investor trying to get into the market, you certainly don't want it to go up by 22% a year. It's not a great sign moving forward. Things don't often go well after that. So again, just gotta really think through that headline there. What we're seeing is really actually great data.
Totally agree. So the next metrics, is active listings. Active listings is a very important metric. Why? Because if you see active listings go way up from year over year, then that means that there are more supply than demand. So if that's the case, then the housing prices may go down. But so let's go over the real data. So let's click on active listings. Yes, at the beginning of the year, the first 3 months of the year, just like any other market, you have seasonality. You have a spring buying season. Of course, the inventory has gone up a lot. Yeah, there's glut of inventory, especially in Florida. The national news pounds on this the early part of the year about Florida and Texas, for that matter, where we have a lot more inventory. But then again, take it by Texas, by context. The headline is the first 3 months of this year, 2024. Wow, active listings, 11,239 in the Southwest Florida, Cape Coral. And the year-over-year, 73% year-over-year increase from the previous year, same time, 2023. Now, one would think, and the housing crash bros have a field day to talk about it. Housing market is crashing in Florida, in Southwest Florida, whatever. But again, take into a context. Yes, inventories have risen a lot. Still, It's still at an equilibrium. It's not still the demand and supply is pretty much even at during this point now. The trend, let's look at the trend of active listings. I know, Justin, I know you have a comment, but then the next few months from April all the way until September, we have decreasing active listings. What does that mean? That means the trend tells that the demand has absorbed the high inventory at the beginning of the year. Seasonality also plays a part. The fall season, each year, each seasonality, the fall buying season, the last 4 months is always because people already are situated and they have families or settling at the school district. They want to stay in, so they're not ready to buy any during the fourth quarter of any year. So active inventory is decreasing. It may continue to decrease a little bit. So therefore, we're not seeing glut of oversupply of the inventory relative to demand. So this is a good sign coming down active inventory. So what is your thought in terms of the year-to-date trend with the active listings in Kipkora?
So there's a couple of things to, again, if we're going to really think hard about why it's going up and where it is now, to keep in mind. First, you can see that orange line down there of 2021, where, 2021, we were entering and really in the COVID real estate boom, right? Things were going up really quick. There was no inventory. That orange and black line, they're unhealthy levels. If we were looking at 10 years of data, they'd be the lowest on the entire page. It was not good. Also, right around where you have that dot right now, remember Hurricane Ian hit Cape Coral in 2022. Stopped inventory for a while, right? You can't sell anything when a Category 5 hurricane goes over a market for a couple of weeks there, right? You got to make sure everything's structurally sound. Inspectors are going to check everything. Insurance isn't going to bind anything. It put a halt on the market for a while. But what you've seen, again, general steady increase, and I would speculate that if we had a 10-year active inventory chart, where you're at right now is probably very average for that 10-year history. When we switch over to sales, I think you'll see a little bit more of what we mean. Keep in mind, again, just over 9,000 active listings in the market. And if we pull up, we have number of sales or even months of supply. I think that's really going to paint a picture for us there. When we dive into that.
I'm getting to that. Weeks of supply.
Perfect.
At the beginning of the year, yes, it's off the chart, right? It happens all the time in the growth markets such as Cape Coral and other growth markets in the country. At the beginning of the year, you always have to see a lot of supply, more so in Southwest Florida than in other section of the country, 44 weeks of supply, which is quite high. But then go back as we move into the March, April, the spring buying season, then the supply level out, then increase a little bit toward July. And now the seasonality of the fall season, now as we speak, the ending date was September 15th last week. We have a 30 weeks supply. 4 weeks is equal a month. 4 times 30 is a little bit more than 7 months. There are 7 months supply of inventory in this market. 4 to 6 months is a balanced market. Demand pretty much equal supply. At 7 months, Justin, correct me if I'm wrong, we are still a little bit in a buyer's market. That means there's a little bit more supply than demand right now. So, in fact,
But that's where we want to be, right?
it's good for investors because you have the leverage as a buyer, as an investor from out of state to negotiate for better terms because you are dealing with a motivated seller. The motivated sellers are the new builders in your market. So you can get some deals, get some incentives, which you can talk about momentarily or later in the podcast. But so what do you think about this 7 month supply of inventory?
In a perfect world, it's where we want to be as an investor entering the market. A slight buyer's market. That's good. Right? Even we go back to the beginning of the year where inventory did surge, it still followed a pretty normal trajectory. Every year, it works out. Everyone comes into town. Everyone's here. You put stuff on the market, course of the season, it sells. And when you look at that, it did. We had the peak in January and it sold over the course of the season, put us right back to roughly 6 months that we want to see. And that's good. That's healthy. That's where we want to be. And even now, looking at the sale to list price ratio, no one's selling things at 75% of list price. What is it at right now? 96.5%? It's normal. Every buyer's going to come in and negotiate a little bit off the deal. That's really actually great data to see that the inventory that's there, while it's giving a little bit of negotiating room, about 3% to the buyer, it's not plummeting. When you see that black line back in things were selling for 105% of list price, or 101% of list price, that's bad.
Right.
That is bad. We do not want a market where we need to come in as a buyer and offer more than what the seller is asking. There's problems there. We want to see right about where that yellow, that blue, that's great. We're coming in, a little bit of a deal. That's good. That's healthy growth.
Yeah. As we conclude this module, Justin, now that the mortgage rate a year ago, like October of 2023, the mortgage rate were 8%. It was a housing transaction crash. Housing transaction crash on a historical basis. So less homes were being sold last year than in the past 30 years. So now the mortgage rate has came down all the way down to 6.1% with the rate cut last week of 50 basis points by the Federal Reserve. And then we see some surging of activity, but not much for the remaining of this year. But watch out, Justin, and investors out there, when the next February, March in 2025, the spring buying season, everybody, all the people staying the sidelines, primary home buyers and investors alike, they will re-enter the market, they will flood the market, and there's still lack of sufficient supply. You know what's going to happen? You will see, as an investor, if you wait to buy, if you wait for the perfect time to buy, if you wait until the spring of the upcoming 2025, you're going to get more competition. The deal that you want right now is gone. Builder incentives may go away in the next few months, and no more deals, because right now still a buyer's market, because there's so many people are getting off the sideline, create more competition, more bidding wars and multiple offers, not to the extent we saw in 2021, and we would never see 2021 again, I don't believe. But so that's the trend is so obvious to take advantage of right now. If you wait for a moment, you just miss out. It could be a higher price. The deal that you want right now is gone. And you pay a high price, more competition. That's crazy. Go ahead. What's your
It's like going right back to our high school economics final, right? What did the Fed do over the last 2 years? We raised the interest rate, right? And that decreased demand, it increased supply, and it caused prices to come down, which they wanted to do. But now supply is high and demand is low. So we're lowering the rate a little for an increased demand, which is therefore going to lower supply as more properties are sold, and it's going to start raising the price again. So where do we want to enter? Do we want to enter the market now, or do we want to wait till all that demand is back and all that supply is going away and buy at a higher price? That's it. That is what's happening here. We can look at 1,000 far more complicated metrics, but it boils down to a simple equation. That's where we're at.
Yep. Okay. My recap, my takeaway from this video is that, so Southwest Florida being such a growth market, Florida overall will still coming. There's still population growth, job growth. And when demand is picking up, so therefore, so for the future, right now you can buy cash flow properties at 25% down payment. That's all we need to be said. We could have another topic to dive deeper into the specific investment property in question. But again, the recap for this property is Southwest Florida is still in a growth mode, population growth, job growth, rental market is very strong. You can cash flow buying at 25% down payment, great, new construction. So Justin is the man to do it. That's it for this module. Any last minute comments?
The final thought that I have, Cape Coral, Florida didn't exist until the 60s, right? It's still a relatively very young market compared to areas in the Northeast that are hundreds of years old. So when you say that it's in growth phase, yeah, absolutely. There's still more homes being built, more people moving here. It continued to grow every single year since it was founded back in the 60s.
I agree. So, Justin, again, you have boots on the ground. You have done a number of transactions for our investors and other out-of-state investors. You are also a one-stop shop. You are also, you run a property management company. So you know what's going on in the local market. Real estate is hyper local. You know your market. You know the neighborhood, the towns. You have a good relationship with builders. You can get some great deals for our investors, cash flow, especially in a suburban area like LaBelle and Lehigh Acres in those areas. But we're not going to go over details on this particular module. On a subsequent podcast, we will discuss in depth. We could have a bi-weekly update on the Southwest Florida market for investors out there. Whether you live in California, whether you live in Chicago or Northeast, Pacific Northwest, you live in a high-cost market, this is still the market to pounce on. Not only that, you have other investors coming to the Southwest Florida market moving forward. You have foreign buyers from South America and from other areas of the world coming back to Florida over again, right? So a lot of competition down the road from a lot of people with some money. You better get in there now before everything just break the dam. It's just break apart. All right. That's all I have to say. Thank you so much. You receive a lot of value at all. Just please subscribe to my YouTube channel and also register your email into our website below so you become a free member of our investment network. So you receive daily updates about free education on real estate investing and opportunities. Thank you so much. Have a nice day. This is Seewing Yee and Justin Zawatney from Southwest Florida. Thank you so much. Bye-bye.